Good evening, friends. Welcome back to my channel, Intraday Trade. My name is Robin, and let's do a Nifty and Bank Nifty analysis. Okay, so this is going to be a little bigger video because I'm going to do some positional analysis on Nifty and Bank Nifty, and also we are going to talk about the trade plan for tomorrow. So let's quickly begin. So we are going to do a top-down approach. So top-down approach means from a higher time frame to a lower time frame. So the first time frame that I've selected is monthly chart. As of now, ignore this line that I've drawn, 43,853. Currently, the important support or a resistance level right now is 41,829. Okay. So coming back to a candlestick theory, so this resistance was taken out by this particular candle. Okay, so this is the November month candle, and it has broken the resistance and given a strong close. However, like we always look for a follow through candle whenever a support or a resistance breaks, but in the month of December we haven't seen a follow through candle. So what does this mean? If we need a follow through candle here, this red candle, which is like we have 12 more days to go in the month of December, so this has to properly close as a green candle. So a close uh, nearly to the high of this particular candle only be able to then turn green. Okay, so this is one of the observation, and this line 41,829 is going to be the support. Okay, and below this, whenever the market comes below this, so when it comes below this, it itself is a danger zone, and when it crosses this low of this candle, then it is a breakout failure, and the market can come down very quickly. Okay, so any monthly trade, non-directional trade, if you want to plan, then your levels should be 41,000 to 44,000. So this is the area that you need to cover, and you can plan a range something like this, and the market should trade within this range, and you will make money on a monthly trade. So this is what I wanted to explain on a monthly chart. Now, when I said top down approach, now we'll go back to the weekly chart and understand what's happening. So the conclusion from monthly chart is, let us write it here. From the monthly chart, the conclusion is market did not give follow through candle. So no follow through candle. Okay, no follow through for the resistance break of 41,829. So this is what the take is from the monthly chart. Now let's look at the weekly chart. On 7th November, so this is the candle. We broke the resistance of 41,829 and we gave a follow through, and we almost reached 44,000. And here we do not have a follow through. So here I have marked this candle's high as a resistance. So this is the level of 43,853, which I asked you to ignore first when we were looking at the monthly chart. Okay, now this is the resistance for us. So we do not have a follow through. So let me tell you one important information. Why do we talk about follow through? Okay, so imagine this is a resistance, this is a breakout candle. Okay, so we call this as a breakout candle, and then we need a follow through. So this is a follow through candle. Okay, so this is the concept which I have already explained. So what happens, or when do you get bearish? Whenever the follow through candle's low is breached. Okay, whenever the low is breached, then it is a sign of failure. Okay, it is not a confirmation, but it is a sign of failure. And when does it fail is whenever it closes below the breakout candle. Okay, so this is known as breakout failure. So this is something you need to understand. In other words, whenever you see continuous green candles, this is bullish. So when the last green candle's low is breached and the red candle closes below it, this we call it as an end of a trend. That doesn't mean that the market gets bearish. Okay, when we say end of a trend, that means it is about to put a swing and then it may again go up. So this is what the understanding should be. I hope things are clear. So on the 7th of November, we broke the resistance, we gave follow through, and at 44,000, we have put a strong red candle. But as of now, this is just an indication that there is no follow through happened further. Now, when a weekly candle will close below this green candle, okay, then you call it as an end of a trend. Okay, so what is the low of this candle? Let's quickly check that. I think it's around 42,950. Yeah, the low is 42,948.45. So whenever we close below 42,948, okay, then it is end of the current trend. So keep this in mind. So 42,948 is going to be an important support, and the market will not break it immediately. Okay, so keep that in mind too. So if you expect it to break it tomorrow itself, it will not happen. At least for the first time, it will bounce from that place, and then eventually in the second half it may break, or maybe on a Tuesday it may break, but it is not going to break immediately because it is going to be a weekly support. Okay, so for a weekly non-directional trade, what should be the range? The range should be 42,500 to 44,000. Okay, see how the range is shrinking as per the uh, time frame analysis. Okay, so why do we have 42,500 as support? Because we know that when we break 42,950, the trend is going to change. Okay, so what we actually do is so this is a weekly candle. Okay, so we need at least 2 daily candle close below 42,900. Then only you will confirm that okay, it is changing to bearish. Then you can actually change your non-directional trade to a directional trade. Okay, then we talked about weekly, we talked about monthly. Now we will talk about daily. So what do you see in the daily chart? On the daily chart, this was the breakout candle. Okay, breakout candle of level 43,853. So we broke this and we gave a follow through. This is considered to be follow through because what is a follow through? The next candle should close above the high of the previous candle or the breakout candle. And here the closing is definitely above the previous candle. However, the candle is not a convincing candle. Okay, because whenever we see a candle something like this looks better than a candle something like this. Okay, so just a second, let me just erase this. So now see what happened. This is a follow through candle. What did I tell you? When the follow through candle's low is breached, then the market becomes or it shows a sign of failure. Okay, sign of failure. And the next point that I said is whenever a breakout candle's low is breached, then it is a sign of failure. So whenever there is a failure, the market comes down sharply. So when we crossed this low, the size of the candle became very big. So on the daily chart, it looks like it did not take support, but I'm definitely sure on the smaller time frame. So what is the low? The low is 43,767. Okay, let's see if it took halt at that place. Okay, let's do one thing. We'll put a line here so that it is easier for us to understand. The low of this candle Let's put a green color and let's go to a smaller time frame. See, it did not break directly. It consolidated in this range and then it gave a breakout with a follow through and then it fell. So whenever the next time market comes back to this range, definitely this is a shorting opportunity. We'll get another good fall. Okay, so this is how you analyze on a smaller time frame, how to check which level is important. Okay, now coming back to the daily chart, let's zoom in a little. So please don't mind that I'm taking time. I'm taking time just to ensure that the learning is passed on properly. So we broke this green candle, a breakout failure, and now 43,793 to 43,853. This is going to be a strong resistance. This will only be considered like buying should be only done about this level. Okay, for a new trend. Or at the bottom we'll try to catch the bottom also. That will talk in some other video, otherwise the video will become very big. So right now we have a bearish candle and this is a follow through candle for this bearish candle because the close is below the low of this candle. However, this is kind of a doji, so we can expect another doji on a daily chart here. Okay, so whenever there is a big doji, this is again a learning. So let me tell you why I'm saying that we can expect another doji. So this is an indecision candle. Okay, so when we have a big indecision candle, that means a lot of people are not able to decide on where the market will go. But will that indecision or will that quantity of people will stay like that? No. So for example, imagine there are 500 people who are not able to take any decision. But on Monday, there will at least be 200 people who will take some sort of a decision whether the market is going to continue to go down or continue to go up. So if the quantity is reduced from 500 to 200, we'll see another small indecisive candle. Then what happens? Then further people wait for a breakout of the high or the low. If the low is taken out, that means a decision has been taken. Further people will short the market again. So this is how you need to identify a doji. Okay. So when I said the low is breached, so we already discussed. So this low breached, sign of failure. This low breached, it is confirmed failure, and we see a big candle. So now on a daily chart, like I said, we already have this resistance for any non-directional trade. What should be your range? Your range should be for like you should be able to cover 43,850 on the upside, and on the downside you need to cover 42,950. So 42,950 is a support that we took from the weekly chart. So this should be your range for tomorrow and maybe for another day or two. Okay. So how do you identify 42,950 is broken on a higher time frame? So whenever 42,950 has to break, we need 1 hour candle closing with a follow through. So if this happens, that means it is a confirmed break of the support 42,950. Then you change your non-directional trade to a directional trade. Okay. So important supports that you need to note down is 42,950. This is based on weekly time frame, and on the monthly time frame the level is 41,829. This is your monthly support. Okay, so till this level you can definitely plan some non-directional trades. So this is my view on Bank Nifty on a higher time frame. Let's quickly analyze Nifty too. Okay, this is Nifty. Let's put a monthly time frame. Here, if you look at Nifty, I have drawn a resistance line. Okay, this is a conclusion taken by me because when we talk about resistance in Nifty, it is not as clear as Bank Nifty because Nifty was following this kind of a trend line. Okay, so this entire wick region can be considered as a resistance, but here to ensure that we don't goof up, I have taken a resistance which is 18,442. 18,442. This is a strong resistance. So what market did in the month of November, it broke the resistance, but there is no follow through. Okay, so whenever we close below this low, that means it is a breakout failure. So what happens in a breakout failure? We'll see a big red candle coming up sharply. Okay, this is what I wanted to make you all understand. So the resistance is basically from 18,300 to 18,600. However, if you want to consider a line as a resistance, it is 18,442. So again, same thing, like if this should be considered as a breakout, then this entire red candle should turn into green. How will that happen? Obviously, when we close above this high or the current candle's high, then it will turn green. So what is the current candle's high? It is 18,887. So a closing around 18,900 will confirm that it is a follow through. Then we'll wait for a small dip and then we enter into a trade for the further upside. But as of now, I don't think so that would happen. The December month's closing can be as a red candle. Okay. And any monthly position that you need to plan on Nifty, your range should be 17,950 to 18,820. Okay, why 17,950? Because the low of this breakout candle, that is 17,959, around 17,960. So whenever we breach that low on an hourly time frame and give a close, then we are going to see a sharp fall coming up. So your range should be 17,915 to 18,220, 18,820. Whenever we breach 17,950, you change your trade to from non-directional to directional. But at least for since it is a monthly candle, it will not breach immediately. It will take time. Okay, I'm not even sure if it will breach this month. It can do it next month also. Now we will check the weekly chart of Nifty. So the same resistance. Now let's understand what happened on a weekly chart. So this candle is the breakout candle. This candle is a follow through candle. So what I said, whenever the follow through candle's low is breached, it is a sign of failure. Okay. So here you are 60% confirmed that it is failed. And when the low of this candle is broken, is because this is a breakout candle. So when the low of this candle is broken, then it is a confirmed failure. The market will come down fast. What is the low of this candle? The low 18,133. So 18,100 is the weekly support. Okay, so this is something which will not breach tomorrow. It may take another day or so. So we need to see that it should, try and trade around 18,100 and then it will break. Okay. So what should be a weekly range if you're putting any non-directional trade? 18,100 should be a support, and on the upside you cover 18,700. So here you can actually cover 18,000 also, so that you wait for at least 2 1-hour candles to close with a follow through. Then you can change it to directional. Not 1-hour candle. This is a weekly chart, so we need 2 daily candles. Okay. Now finally we'll do the daily analysis of this. So if you look at the daily analysis, forget whatever happened here. We'll just talk here. Okay. So this is the breakout candle. This is the follow through candle, and this is another follow through candle. And last follow through candle's low was taken off, sign of failure. This was the important candle, sign of failure. And when we broke the low, this was the breakout candle. So if this is taken off, that means there is definitely going to be a selling pressure. So now we are definitely trading below 18442. Here, this is very clearly visible that the daily support has been broken. So now it is bearish. So now on a daily basis, what range you will plan? The range you should plan is 18,000 to 18,450. Okay, this should be your range for intraday or for maybe next 2 to 3 days. I hope this is clear. So monthly support for Nifty is 17,950. Weekly support is 18,100, and your daily support will also be 18,100. So these levels are very important. Based on this, you can definitely plan non-directional trades. I hope you understood and you like the approach of how you can only based on candlesticks, you can actually plan positional trades on a monthly, daily, weekly, and all kind of time frames. So thank you for watching this patiently. After this video, I'll immediately upload the intraday video so that you have two separate videos, and the intraday video we can have it a little smaller. Okay. Thank you for watching. Let's meet in another video. Till then, take care. Bye bye.